Hi, welcome to Balanced Gains. This is Govind. In today's video, we're diving into the exciting world of the stock market. Whether you're new to investing or just need a refresher, this video is your one-stop shop for understanding the fundamentals. We'll break down complex jargon into simple terms and explore key concepts to equip you with the knowledge to start your investing journey with confidence. Stick around till the end for some valuable tips and insights that can help you make informed decisions. So let's get started and unlock the potential of the stock market together. Imagine a bustling marketplace, but instead of vegetables or clothes, people are buying and selling pieces of companies. That's essentially what the stock market is. It's a platform where buyers and sellers come together to trade shares of publicly listed companies. Here in India, we have two primary stock exchanges, the Bombay Stock Exchange, BSE, and the National Stock Exchange, NSE. The BSE, established in 1875, is Asia's oldest stock exchange. Think of these exchanges as organized platforms that facilitate smooth and transparent trading. When you buy a share of a company, you're essentially becoming a part owner, even if it's a tiny part. And just like any marketplace, the prices of these shares fluctuate based on supply and demand. Now let's break down what a stock or share actually represents. In simple terms, a share is like a small slice of a company's ownership pie. When you buy a share, you're essentially buying a tiny piece of that company. For example, imagine a company called Delicious Samosa Inc. has issued 1,000 shares. If you buy one share, you own 0.1% of Delicious Samosa Inc. Now there are different types of stocks, primarily equity stocks and preference stocks. Equity stocks are the most common type. They represent ownership in a company and often come with voting rights, giving you a say in company decisions. Preference stocks typically don't offer voting rights, but give you priority when it comes to receiving dividends, which are a share of the company's profits. Ready to dip your toes into the stock market? The process is simpler than you might think. First, you'll need a demat account, which is like a digital locker for holding your shares. Next, you'll need to open a trading account with a stockbroker. Think of a stockbroker as your intermediary, executing buy and sell orders on your behalf on the stock exchanges. Once you have your demat and trading accounts set up, you'll need to link your bank account to fund your trades. Now you're all set to place your first order. You can choose to buy or sell shares through your trading account, and your order gets executed on either the BSE or NSE. For beginners, we recommend starting with a reputable and user-friendly broker like Motilal Oswal. You can find a link to their website in the description below. You often hear about the Sensex and Nifty in the news, but what do they actually mean? They are stock market indices, which are like barometers that measure the overall performance of a group of stocks. The Sensex, also known as the S&P BSE Sensex, tracks the performance of the top 30 companies listed on the Bombay Stock Exchange. Think of it as a VIP club of the most prominent companies in India. Similarly, the Nifty 50 or Nifty represents the top 50 companies listed on the National Stock Exchange. These indices give investors a quick snapshot of how the overall market is performing. If the Sensex or Nifty is up, it generally means the market is bullish and investors are optimistic. Conversely, if they are down, it indicates a bearish sentiment. Now, let's uncover the forces that make stock prices dance. One of the most significant factors is company performance. When a company performs well, its profits soar, and investors get excited, driving up demand for its stock. Market sentiment, which is the overall mood of the investors, also plays a crucial role. If investors believe a company has a bright future, its stock price tends to rise, even if its current performance is moderate. Then we have economic factors such as interest rates, inflation, and GDP growth, which can influence stock prices on a broader scale. And lastly, Let's not forget about global events. International crises, policy changes, or even a tweet from a prominent figure can send ripples through the global economy, including the Indian stock market. Remember those dividends we talked about earlier? Let's dive a little deeper into how they work. A dividend is essentially a reward that some companies share with their shareholders out of their profits. Think of it as a thank you gift for being a shareholder. Now, not all companies pay dividends. Some companies choose to reinvest their profits back into the business for growth. But if you own shares of a company that does pay dividends, you're in for a treat. The amount of dividend you receive depends on the dividend per share declared by the company and the number of shares you own. Dividends are usually paid out either quarterly or annually, providing a passive income stream for investors. While the stock market offers tremendous potential for growth, it's crucial to be aware of the risks involved. One of the inherent risks is market risk, which refers to the volatility of stock prices. The market can be unpredictable and prices can fluctuate significantly in the short term. It's essential to be prepared for these ups and downs and not panic sell when the market takes a dip. Then there's liquidity risk, which arises when a particular stock is not widely traded. If you need to sell your shares quickly, you might find it challenging to find a buyer at a desirable price. And lastly, there's company-specific risk, which pertains to the performance of a particular company. When it comes to investing in the stock market, you can choose between a long-term or short-term approach. Long-term investing involves holding stocks for several years, riding out market fluctuations, and letting your investments grow with the company's progress. It's like planting a seed and patiently nurturing it into a tree. On the other hand, short-term investing, also known as trading, involves buying and selling stocks over shorter periods, ranging from days to weeks. Traders aim to capitalize on short-term price movements to make quick profits. However, short-term trading requires significant time, skill, and a higher risk appetite. For most beginners, long-term investing is generally considered a safer and more prudent approach. It allows you to benefit from the power of compounding and reduces the impact of short-term market volatility. You don't need a fortune to start investing in the stock market. Thanks to instruments like systematic investment plans or SIPs, you can begin your investment journey with as little as 500 rupees per month. SIPs allow you to invest a fixed amount regularly in mutual funds or exchange-traded funds, also known as ETFs, which are like baskets of stocks that track a particular index or sector. Investing through SIPs is an excellent way to build wealth gradually and benefit from the power of rupee cost averaging. By investing consistently over time, you average out your purchase price, reducing the impact of market volatility. As you embark on your investing journey, you'll come across various stock market terms. Let's demystify some of the key ones. First up, we have a bull market. This term is used when the stock market is experiencing a prolonged upward trend. Imagine a bull charging forward with its horns held high. That's the image of a bull market. On the flip side, we have a bear market, which signifies a prolonged downward trend. Think of a bear hibernating during winter. It represents a period of decline. And finally, you might hear about IPOs, which stands for Initial Public Offering. This is when a company decides to go public and offer its shares to the public for the first time. Congratulations! You've just completed a crash course on the basics of the stock market. Remember, this is just the beginning of your investing journey. If you found this video helpful, please give it a thumbs up, share it with your friends, and subscribe to our channel. Also, you can find a link in the description to open a Demat account with Motilal Oswal. Thank you for watching, and here's to making smart investment decisions and achieving your financial goals.